Hey guys, Boris Lasser from BKForexAdvisor.com. Great to be with you. Still a little bit under the weather this week, so that's why I still sound a little bit like a frog. My apologies, but getting better. This week, obviously, the trade of the week, probably the trade of the month, the trade of the year so far, was the utter surprising Fed funds rate hike post North American close yesterday that just created an enormous amount of volatility. And I want to go through with you exactly how I traded it using my session-based breakout strategy and just show you how reality very often deviates from theory. In theory, the perfect trade, of course, is this dollar-yen to the long side. The moment you hear the news, this is clearly very dollar bullish. Dollar-yen makes a session high over here, even post-news. All you got to do is just get long and strong, and basically get long and trail the move up. It was good for about 30, 40 points. Do I do that? Partially. I do get long dollar-yen, as you can see on the breakout of the session-based high, but only for about 10, 15 points, and then kind of let go. Because, of course, my mind wanders. I'm not really following my script fully, and the volatility at that moment is just so brutally fast that you do not have time to kind of methodically plan out your trade. So the second trade then is, of course, to go to the euro dollar. Let me just move this out of the way. The second natural trade is, of course, the euro starts breaking down. Of course, it breaks its session low, and the natural trade here is, of course, to trade the session low to the downside. Had you been smart enough to get in around these levels, you were in great shape. But unfortunately, by the time you discover a trade, it's like around here. So effectively, this is actually a retrace against you. You're probably going to get stopped out. So I happen to sort of get lucky on my volatility move here in the euro. And when I move into the euro, I catch the move over here, and I make a little bit of money. But because of this massive volatility, I am not ready to commit a lot of capital or a lot of time to the trade. As you can see, in retrospect on the charts, everything looks easy. In reality, when everything is happening literally 50 points at a clip at every 10-second basis, you're going to be much less assured in your trading strategy. Now, this is where things get really, really complicated, because after taking the euro and the yen, which are natural trades, I decide to screw around with the pound. And the pound, of course, not only do I decide to screw around with the pound, but I decide that I'm going to be clever by a half, and I'm going to actually start buying the pound on a retrace move, again, making a cardinal mistake, one that I constantly try to correct myself from, and I hope you can learn from my mistakes, which is that when you have a massive fundamental move, the stupidest trade you can possibly make is a fade trade of that fundamental move, even if you do think there's a high chance of a pop-up for 20, 30 points. It is much better to trade with flow than to trade against it. I don't know how many times I'm going to have to repeat this to myself and to everybody else who listens, but that is actually, as you can see, the underlying fact. Because if you sort of stretch out this trade further, you can see that pound actually went all the way down to 54.20 before the move came out. But as you can see, all these stop outs, the red dots, are my attempts at being too clever by a half when I basically decide that I'm going to try to buy the bottom instead of going with this underlying trend of selling the flow. However, the one good thing I do is I'm able to correct my mistakes midpoint. So when I do get stopped out the second time, I realize that the pound now breaches the 55 handle, which is a very, very, very key area. And this very likely is going to trigger the euro 135 breach, which is the absolute key area that everybody was focusing on. So I actually get ahead short ahead of the 35 on the fact that the pound broke the 55. And here I go in with a 2-unit position. And I'm actually, as you can see, able to really, really monetize this trade nicely. I make T1 and then T2 on this particular trade. And at the same time, because the pound now is breaking the 155 level, I am following that trade to the downside. And again, I monetize that trade, T1, T2, making my money back. So how does all of this look like on tape? This is the equity curve of this time. This is me basically making the correct trades during this time. By the way, notice the amount of trades you're doing. This is probably about, I don't know, 10, 20 trades in a period of about an hour. My equity curve going up nice and smoothly when I'm trading properly. My equity curve sliding very badly as I'm trying to buy bottoms and fade the move. And finally, executing fully to plan with 2 lots, T1, T2 getting hit, and I'm making everything back that I lost and then some, ending on the highs of the day. So, reality, very ugly, very messy, very different from practice, but nevertheless, still profitable. And that is basically how you can turn around your losers and turn them into winners, by ultimately staying true to your plan. It's Boris Schlossberg. I'll be in London next week, so I'm wishing you the best of luck. Be more trades at bkforexadvisor.com. Come join us. And I'm hoping to put down my session-based trading strategy on paper. I will have it as a giveaway report, and as soon as I have it ready, I will let everybody know, and we'll post it on the website, and you'll be able to download it for free. So we'll talk to you soon. Over and out.